Welcome, Bankless Nation, to the special edition of Alpha Leak. The Alpha Leak episodes are where we explore projects, DAOs, communities, teams, all throughout the crypto space. Today, we are talking with Mike, the co-founder of Lyra. Lyra is an on-chain options market on Optimism, on the Optimism Layer 2. And on-chain options, of course, they're a fundamental financial primitive. Why don't we have them in crypto? The answer is fees. Layer 1 blockchain fees are untenable, and they're just, the L1 blockchain just isn't fast enough to allow for on-chain options. So we know that as a product, options will always have come from Layer 2s, but Layer 2s themselves have not yet been ready to support the amount of computation and amount of utility that options bring until now. The fees on Optimism, the fees on ARBITRUM are approaching zero, meaning that the optionality for options is going through the roof. And with this, Lyra has finally gotten its Avalon launch out the door. It's coming out this week for the experienced options traders on Lyra and then the rest of the community at the end of this month. And so I brought on Mike, the co-founder of Lyra, to talk all about Lyra and on-chain options and the world that gets unlocked when we finally get on-chain options out the door. So, Bankless Nation, I hope you enjoy this Alpha Leak episode of the Bankless podcast right after we get to some of these fantastic sponsors that make the show possible. If you're trying to grow and preserve your crypto wealth, optimizing your taxes is just as lucrative as trying to find the next hidden gem. ALTO IRA can help you invest in crypto in tax-advantaged ways to help you preserve your hard-earned money. ALTO Crypto IRA lets you invest in more than 150 coins and tokens with all the same tax advantages of an IRA. They make it easy to fund your alternative IRA or crypto IRA via your 401k or by contributing directly from your bank account. There is no setup or account fees, and it's all you need to do to invest in crypto tax-free. Let me repeat that again. You can invest in crypto tax-free. Diversify like the pros and trade without tax headaches. Open an ALTO Crypto IRA to invest in crypto tax-free. Just go to altoira.com/bankless. That's ALTOIRA.com/bankless and start investing in crypto today. Living a bankless life requires taking control over your own private keys. And that's why so many in the Bankless Nation already have their Ledger hardware wallet. And brand new to the Ledger lineup of hardware wallets is the Ledger Nano S Plus, a huge upgrade to the world's most popular hardware wallet. With more memory and a larger screen, the Nano S Plus makes it easy to navigate and verify your transactions. And the paired Ledger Live desktop app gives you increased transparency as to what is about to happen with your NFT. What you see is what you sign. The Nano S Plus gives you the smoothest possible user experience while you're doing all of your crypto things. So go to the Ledger website to check out the features of the new Ledger Nano S Plus and join the waitlist to get yours. And don't forget about the Crypto Life card, also powered by Ledger. The CL card is a crypto debit card that hooks right into the Ledger Live app, right next to all the DeFi apps and services that you're already used to doing, like swapping tokens and staking. So if you don't have a Ledger hardware wallet, go to ledger.com, grab a Ledger, and take control over your crypto. ARBITRUM is an Ethereum Layer 2 scaling solution that's going to completely change how we use DeFi and NFTs. Over 300 projects have already deployed to ARBITRUM, and the DeFi and NFT ecosystems are growing rapidly. Some of the coolest and newest NFT collections have chosen ARBITRUM as their home, all the while DeFi protocols continue to see increased usage and liquidity. Using ARBITRUM has never been easier, especially with the ability to deposit directly into ARBITRUM through all the exchanges, including Binance, FTX, Huobi, and Crypto.com. Once inside, you'll notice ARBITRUM increases Ethereum speed by orders of magnitude for a fraction of the cost of the average gas fee. If you're a developer who wants low gas fees and instant transactions for your users, visit arbitrum.io/developer to start building your dApp on ARBITRUM. If you're a degen, many of your favorite dApps on Ethereum are already on ARBITRUM, with many moving over every day. Go to bridge.arbitrum.io now to start bridging over your ETH and other tokens in order to experience DeFi and NFTs in the way it was always meant to be: fast, cheap, secure, and friction-free. All right, Bankless Nation, welcome to this special Alpha Leak episode. We are talking to Mike, the co-founder of Lyra. Lyra is on-chain options based off of the Optimism Layer 2. Mike, welcome to the show, man.
Hey, David. Thanks for having me on.
Yeah, let's go ahead and dive right into the genesis of Lyra. Can you kind of give the backstory for the project and how it came to be and how it got started and who joined the team?
Yeah, of course. So back in 2020, I was working at Synthetics during DeFi summer as a smart contract engineer. And, we were seeing a proliferation of activity on chain, from Uniswap to AAVE to Compound, all these new DeFi primitives being built and really taking off. People were looking at, what's the next thing? And derivatives were a really interesting kind of frontier that people were starting to explore. So there was some traction back then in perpetuals, like with DYDX, Protocol, and a few others. But options were still quite an untapped market. And I started to look into options back then, and I noticed some really interesting things. Options are actually really composable primitives, right? Like perhaps the most composable primitive you can, possibly imagine, right? You get the right, but not the obligation to trade an asset for a certain price on a certain date in the future. That's called the expiry. So with this template, you can basically construct any payoff you want, right? You can bet on the price of an asset going up. You can bet on the price of an asset going down. You can even do funny, interesting things like bet on volatility and all these more intricate payoff structures that, options traders like to use. What this means for DeFi though, is it gives people the ability to manage their risk into the future, right? So the way an option actually works is you pay a premium to the option seller, and then you have now the right to do something in the future on that expiry date. And that's a really, really interesting template to start with, I think. So we decided that this would be something to try and build, a liquid market for. And we started to design what, would be an automated market maker for trading options. Now, we're big fans of the AMM paradigm with Uniswap introduced, and then it was popularized by a number of other protocols. But there were some problems when, coming to the options context, because options have a number of different pricing, risk, and liquidity issues that really hadn't been tackled before. And we needed to kind of start from scratch with a completely novel design.
Mike, the AMM world has been adopted just absolutely just through the roof. It's kind of just the new status quo. One thing I'd like to pick your brain on is why options aren't skeuomorphic, in the sense that like Ether Delta once tried to place the order book on chain, but then that just fell when we discovered the AMM through Uniswap. So why is on-chain options the way to go? Or is there something in the future that we haven't discovered yet that will just make on-chain options just like redundant? Like, give us the pitch for on-chain options.
Yeah, sounds good. I think it comes back to this template, right? So to give an example, right, take the ETH 3000 call that expires at the end of this month. That's going to give the holder the right, but not the obligation to buy ETH for $3,000 on the 31st of May. Now, if ETH was trading up at 4,000, that would obviously be a good trade to make. You'd net a profit of $1,000 per option. But on the flip side, say you think the ETH price is going to continue to go down during the current market conditions. Well, you could buy the 1,500 put or the 1,000 put and still net the difference if ETH did drop below that amount, right? So you have this template from which you can actually construct any payoff you want in the future. And I think what it kind of gets to is what options are actually doing at their core is allowing people to transfer risk from the buyer to the seller in exchange for paying the option premium. And that's a really fundamental requirement of any market, because it allows people that aren't speculators on the price to enter the market. So you just have to look back at when and how derivatives actually got started. They weren't started for like leverage or speculation or gambling. It was actually to allow people like commodities farmers and producers to be able to offload risk, right? They were going to produce a certain amount of a crop, in a month's time or 3 months' time. And they actually needed to have certainty right now because they had fixed costs. They had to pay their employees, all these types of things, right? So without derivatives and without options specifically, you don't have the ability for markets to really onboard non-speculators, right, in a way that's sustainable. So I think the ability for DeFi to do that, and flashing forward to what DeFi is doing, right? It's creating a market for everything of value, right? So tokenization via ERC20, 721, and all these types of things is pushing more people into the markets than ever before. And more people are becoming holders of tokens. Not all these people are speculators, right? A lot of them just want to say, stake ETH, earn yield from securing the beacon chain, or hold a governance token and participate in that network and do some activity, whether it's staking or use the token in the network. And these people need to be able to control their risk into the future. So I tend to think that's a pretty essential requirement for any market, and something that's actually quite crypto native.
So is the argument that options are such a foundational primitive to the financial world that there is no replacing them in the same way that we kind of replace order books with the AMM, as in they are just so critical and so like deep in the stack that there is no way that the options primitive could be skeuomorphic, as in it's just like a known science and we're going to have options for the rest of time?
That's right, because it's such a flexible template that you can literally construct anything from it. So it's more than, it is the sort of fundamental primitive from which you can build any financial payoff that you want with enough options.
So why haven't options taken off more than they already have? What's the difficulty and limitations of on-chain options? Yeah,
so this flexibility, which is so great for the user, makes market making a very complex endeavor, right? So when you're making markets on options, right, you have a ton of risk, and this is a known science in the real world, options market making, but it's something that's very difficult to do on chain in an automated fashion. So early options protocols on chain really went for one of two approaches. The first was the order book, right? And it's kind of similar to the Ether Delta example that you used. Early on-chain option dexes using an order book struggled with liquidity and really pricing depth issues on L1. As we know, L1 is not a great place for building an order book due to latency and now due to gas problems as well. So that didn't really work that well. The other type was the AMM type, right? Which is the right approach, but there's a whole lot of complexity you have to deal with to build an options AMM that's able to, one, price options efficiently, two, aggregate liquidity, and three, manage risk for liquidity providers. And early protocols weren't able to do this all again on L1. It's not something you can fit into the Ethereum L1 gas constraints. You need to basically design a protocol natively for L2. In our case, we chose Optimism to be able to solve the pricing, liquidity, and risk management issues.
Okay, so definitely one of the big issues is that options, as far as I know, are very computationally intensive. Maybe not overly so, but definitely more than you would ever want to put on the Ethereum L1. So we need layer 2s to really get this done. I think even layer 2s in their Genesis state still probably didn't have the low fees that were really required for something like Lyra to take off. Is all of this tracking?
Yeah, that's exactly right. So we needed, recently Optimism's been able to compress call data down a lot and get gas fees down even lower. We're still seeing in the kind of $1 to $3 range on our mainnet at the moment, but looking for that to come down with EIP 4844 and some of these other advancements to really into the cents per transaction.
So what's it really going to take for Lyra to eat into like the centralized exchange options market? Because as far as if I know the numbers, I think like something like Deribit has like 80+% of total market share for options. So what's it going to take for Lyra to eat into the centralized exchange option market?
Yeah, so I think it all starts with pricing, and this is where we kind of, our first innovation at Lyra is building a volatility model that's able to accurately map the options surface, right? So as I said, like Lyra's AMM is quite different to the way other options AMMs work and other AMMs in general, right? So, if you look at something like Uniswap, you're trying to find the ratio of the assets to, determine the spot price. With options AMMs, what you're trying to actually do, and the key thing you're trying to work out is what's the implied volatility of the underlying asset. And that's the key parameter that is used in options pricing. So what Lyra does is it kind of makes a market around implied volatility so that when traders come to the protocol and buy options, they push up implied volatility. And when they come and sell, they push it back down. So by creating a two-way market for implied volatility, Lyra's AMM is able to work out exactly what the market is sort of implying the volatility to be, and then use this parameter as an input to the options pricing formula, which is known as Black-Scholes, which is very well used in the traditional world. Once we have a fair price here, we're able to trade options either side and at the market value. But unfortunately, this is still not enough. And this is the second thing that we need to be able to do to really start to tackle the centralized exchange volume is to actually manage risk for liquidity providers. So options are inherently very risky products, and they incur a number of risks over different dimensions, right? So you've got exposure to the underlying asset price going up and down. You've got exposure to the implied volatility going up and down, all these types of things. And Lyra is basically the first protocol to actively manage and sort of mitigate these risks for liquidity providers. So we hedge delta risk for our LPs. We do that actually in a composable way by going off to synthetics and iterating over our liquidity pool's exposure to work out exactly how short or how long do we need to be the base asset. And this helps our LPs stay what's called delta hedged, which means that, when the price of ETH goes up or down, they're not making any money or losing any money. It's independent for them. The other one as well is implied volatility risk, which is really important because that goes up and down a lot. And this is kind of similar to this notion of IL you get in Uniswap. And we have more difficulty hedging this because you actually need options to hedge IV risk. It's called Vega risk. We don't have an options protocol to use. That's why we started building Lyra. So what we do is we kind of build it into the fee that we charge so that if you come to make a trade that increases the IV risk of the pool, you'll get charged proportionately higher fees. And on the other hand, if you come to make a trade that reduces that risk, you'll get charged a proportionately lower fee. So I think with the pricing and liquidity issues that we are currently solving, once we have that in a position where the prices are actually as competitive as Deribit and the LPs are as protected as they would be on Deribit on an order book, I think we're able to really start to offer, the best of the traditional options experience with the best of DeFi, which is like the markets are fully permissionless. They're always on, aggregation of liquidity, these types of things.
So when it comes to building an options market on chain, what are the differences that you've had to build Lyra versus what you might typically expect out of a typical off-chain centralized options market? Like what have you had to like re-engineer and build from scratch? And overall, what are the pros, the benefits of like building option markets on chain? Like what does being on chain like get for you? But then also what are the costs of that as well?
Yeah. So I think the biggest challenge for us was liquidity aggregation. So each option is kind of an independent token, right? Even when they have the same assets. And early approaches kind of looked at this model and would kind of separate out and have one liquidity pool per option. This causes big fragmentation problems and means that you never really have enough depth in the market to service, trades of any substantial size. So what we have done at Lyra is build a single liquidity pool per asset so that all the liquidity is stored across like the ETH market for every option that gets traded on ETH. And this allows us to have, I guess, a style that's much more similar to like a Uniswap AMM, when all the liquidity can enter, provide a lot of depth and really minimize slippage for traders. But this has been a difficult thing because when you aggregate all the liquidity together, pooled liquidity is great, but it also means pooled risk. And this is where you actually need to start to iterate over the liquidity pool to work out what is the net exposure of all this liquidity to, say, Delta, the asset price, or Vega, the implied volatility risk. So this led to the second problem, which is probably the main thing, I guess, design decision we've made at Lyra, which is that we could never really do this building it on L1. We needed the ability to do computationally difficult things. And that kind of led us to going directly to optimism because we needed, an order of magnitude more scalability than we can get. So I think to solve the liquidity problem, you need pooled liquidity, but that introduces the pooled risk problem. And to solve that, you have to go to layer 2. So it's been I guess, series of steps to get where we are.
And one of the things that I've noticed with Lyra is that the options of that are available to users don't go out that far. Like I would today, right now, if I could, take an option out for some ridiculously high ETH priced in December, right? Something like $6,000 to $7,000 Ether December calls, because I think the merge is coming. But right now, as far as I can tell, Lyra options only extend out about a month in advance. So what's the limitation there, and what's the roadmap for that?
Yeah, that's a great question. Actually, it's something we're dealing with at the moment. So the limitation in V1 of Lyra is that liquidity is locked for the entire duration of a trading round. And that's because when liquidity providers want to leave the pool, we have to work out exactly what their share of the pool is. And that includes exposure to options that are still outstanding today. So it's quite difficult to on-chain work out exactly how much they're entitled to when you don't know how many options are going to finish in the money versus out of the money. In V1, we kind of chose to sidestep this complexity and just lock the money for the entire trading round. But that meant we had to pick a maximum length we would put the money in there for. So we picked a 1 month period and we would list options at the start of each month, right? So at the start of the month, you'd get a fairly good selection at 1, 2, 3, 4 weeks, but these would drop off as we move into the month. And then by the last week of the month, there's only one expiry left. All the liquidity is still locked. It's not a great experience for either traders or LPs at that point. So what we've done with Avalon, which is our new release of the protocol that's coming out next week, actually, for some of our more experienced traders, and then a couple of weeks later for the public, is we're getting rid of those limitations. So we're giving LPs the ability to enter and exit the protocol at any time. So we've designed a mechanism that actually computes the aggregate share of the pool that the LP has and includes the value of those options so that they can enter and exit whenever. There's still a short delay, but it means that the follow-on effect from this anytime entry exit thing is that we can list expiries now out to 3 months, so 12 weeks away, so that whenever you turn up to the protocol as a trader, you'll have an access to 1, 2, 3, 4, all the way out to 12 weeks. And this will give a much more comprehensive experience, right? I think there'll be up to 100 strike and expiry combinations per asset for traders to use. We're not all the way to 12 months just yet because we still need to, we still do have money. It's difficult to incentivize people to lock up for that long. There has to be liquidity backing that option. So the market hasn't really implied that there's enough demand there yet for that to happen, but we're slowly increasing the limits with Avalon and hoping to get to longer expiries as well in the future.
Bankless Nation, don't go anywhere. In the second half of the show, we go into the details of the Avalon release as well as Layer 2 Summer, because Lyra, as a community, as a DAO, as an organization, is getting a bunch of OP tokens to allow their community to yield farm with. And so I asked Mike, what's he going to do with all those OP tokens? So if you want those OP tokens and you also want to explore Avalon, stay tuned as we get through some of these fantastic sponsors that make this show possible. The Layer 2 era is upon us. Ethereum's Layer 2 ecosystem is growing every day, and we need bridges to be fast and efficient in order to live a Layer 2 life. Across is the fastest, cheapest, and most secure cross-chain bridge. With Across, you don't have to worry about the long wait times or high fees to get your assets to the chain of your choice. Assets are bridged and available for use almost instantaneously. Across bridges are powered by UMA's optimistic oracle to securely transfer tokens from Layer 2 back to Ethereum. A token proposal is being deliberated as we speak in the Across forum, where community members will decide on the token distribution. You can have your part of Across's story by joining the Discord and becoming a co-founder and helping to design the fair launch of Across. If you want to bridge your assets quickly and securely, go to across.to to bridge your assets between Ethereum, Optimism, Arbitrum, or Boba networks. AAVE is the leading decentralized liquidity protocol, and now AAVE v3 is here. AAVE v3 has powerful new features to enable you to get the most out of DeFi, including isolation mode, which allows for many more markets to be launched with more exotic collateral types, and also efficiency mode, which allows for higher loan-to-value ratios, and of course, portals, allowing users to port their AAVE position across all of the networks that AAVE operates on, like Polygon, Phantom, Avalanche, Arbitrum, Optimism, and Harmony. The beautiful thing about AAVE is that it's completely open source, decentralized, and governed by its community, enabling a truly bankless future for us all. To get your first crypto collateralized loan, get started at aave.com. That's AAVE.com. And also check out the AAVE protocol governance forums to see what more than 100,000 DAO members are all raving about at governance.aave.com. The era of proof of stake is upon us, and LIDO is bringing proof of stake to everyone. LIDO is a decentralized staking protocol that allows users to stake their proof of stake assets using LIDO's distributed network of nodes. Don't choose between staking your assets or using them as collateral in DeFi. With LIDO, you can have both. Using LIDO, you can stake any amount of your ETH to the LIDO validating network and receive ST-ETH in return. ST-ETH can be traded, used as collateral for lending and borrowing, or leveraged on your favorite DeFi protocols. All this without giving up your ETH to centralized staking services or exchanges. LIDO now supports Terra, Solana, Kusama, and Polygon staking. Whatever your preferred proof of stake asset is, LIDO is here to take away the complexities of staking while enabling you to get liquidity on your stake. If you want to stake your ETH, Terra, Sol, or Matic and get liquidity on your stake, go to lido.fi to get started. That's lido.fi to get started. Okay, so is there a path forward for something like 2-year-long options, or is that just going to be untenable for the amount of capital lockup?
There may be. It's going to require people willing to lock liquidity for that long. So the rate that they demand on that might be quite high. There is also as well another thing that's coming with Avalon, which can help with this, which is like the ability to partially collateralize options positions, right? So we're giving traders the ability to, rather than have to post the full collateral, actually post a subset of that. And then it does introduce liquidation risk, but it means that they're able to get 4 to 5 times more capital efficiency, right? So if we introduce that on the back end as well to the AMM, then we can perhaps have a position where you can start to partially collateralize further dated options and, start to push the boundaries really there, maybe out to a year.
Okay, I want to dive into the Avalon update just comprehensively, but before we get there, one last generalized question is the question of composability. And there's already a number of things that you've talked about that I think would be useful for the rest of DeFi, like implied volatility that can, in theory, turn into an oracle, which the rest of DeFi can tap into, right? So like what's the surface area that Lyra has that can become composable in the rest of DeFi? Like the options markets themselves, I'm sure is one. The implied volatility oracle, I'm sure is another one. Just overall, can you talk about the potential for composability with Lyra in the rest of DeFi?
Yeah, for sure. It really is I think the true power of options on chain is composability. So I guess to begin, their options are, there's 2 sides to options markets, right? There's the buy side, buying calls and puts, and then there's the sell side, selling options to the AMM, right? So I think the first area I'd like to talk about, which is something that we've seen really take off in the last kind of 12 months in DeFi, is this idea of option vaults, right? So people you can deposit ETH to a vault and it will sell options on that ETH for you and you'll generate a cash flow, right? This has become a really, I think, fast growing segment of DeFi because a lot of people are interested in yield, although it's not exactly, actual yield because you are selling volatility risk for what you're generating, but it's a really natural evolution to that process. And I think Lyra provides the first on-chain venue for those projects to actually come and build an option vault that settles fully on-chain rather than having to go off-chain and make a deal with a market maker or do something like that. You can turn up to Lyra, build your project and trade directly with the AMM. And we're actually seeing a couple of projects that have started doing this already. There's Polynomial Finance who have launched option vaults on top of Lyra. Now there's Brahma Finance as well. And they're doing something even more interesting, which is basically they are taking interest from L1 yield farming, say in Convex or Curve, these types of things, and they're bridging it over to Optimism via an aggregator called Socket and using that interest to actually buy options on a repetitive basis. So it's another vault, but it's on the buy side. And what it's doing is it's kind of boosting the returns or the expected yield of that liquidity farming or yield farming, which I think is going to be, something that grows a lot in the next couple of months. So there's options on the buy side and the sell side. There's also this whole risk mitigation piece, right? So if you're LPing in Uniswap or on a lending protocol or really on any protocol at all, you have some exposure to the asset that you're LPing, right? If you're lending ETH or LPing Uniswap, you're going to have to be able to deal with the ability or the chance that the price goes down. And what Lyra lets you do is basically turn up in a composable way and buy puts or buy calls or whatever you need to do to hedge your risk in an automated fashion. So that I think by the time Avalon comes out, this will be perfectly ready for these types of integrations. The other one you mentioned as well was implied volatility. And I think having a true on-chain source for IV is something really interesting because that can be tokenized itself and used to allow people to trade the spikes that we see in the market, at the moment and perhaps into the future.
Wait, so does this mean that Lyra could provide the on-chain VIX?
Potentially, yeah. We're not there yet, but maybe one day the on-chain markets at Lyra will be the source of implied volatility. Yeah.
Amazing. That's really, really cool. Okay, let's dive into Avalon itself. But let's also start from the beginning. We've talked about it a little bit, and you see some of the features, but overall, what is Avalon from a high level? Yeah.
So Avalon is our biggest upgrade to the protocol since we launched on mainnet last August. It's basically a full revamping of the trading and LPing experience so that it's entirely seamless for users on both sides. The three main takeaways, I guess, from Avalon are the first one is anytime entry exit to the liquidity pool. So as I said, that's the ability for LPs to come and go as they please. And the best thing about that is it makes the liquidity pool tokens fungible ERC20s. So now these tokens can leave the ecosystem and be injected into the range of ERC20 integrations that exist, right? So lending, borrowing, trading on Uniswap, secondary markets, it really opens up the ERC20 tokens as yield-bearing instruments. Then the next one is rolling expiries, as I said. So the ability to go out to 3 months or 12 weeks, basically, and have options on a consistent rolling basis means that for a trader, you're able to turn up to the protocol, as I said before, and have 100 strike and expiry combinations available no matter when you turn up. This is a really, really good upgrade because not only does it benefit traders, but it means the integrators that we discussed before, they have this kind of always on programmable liquidity on a rolling basis, right? So no matter when they're turning up, they don't have the problem of at the end of the month, there's no options to trade anymore. They can always pick a new subset and build a new integration. The final one, which I think is worth calling out, is this partial collateralization of short options positions. So it's difficult in V1 in Lyra for traders to arbitrage the vol surface back in line. And that's because you need so much collateral to sell it back down. It's hard to keep it, lined up with something like Deribit. What we've done is we've basically introduced a mechanism that you can partially collateralize these positions and you will be at risk of liquidation if you don't have enough value in your account basically to cover the option position, but you get so much more capital efficiency that you can start to bring the vol surface in line much more efficiently. So it's great for traders, but it's even better for the protocol because the protocol is a much healthier position than it was.
Very cool. Very, very cool. And then, so all of this is coming very, very soon. But what about what's left? What's left to complete the vision of the Lyra protocol? And also, what is the vision of the Lyra protocol if Lyra is maximally successful?
Yeah, for sure. So there's still a lot left. So we want fully permissionless automated markets on every asset that exists on chain, any strike and expiry combination that a user or a protocol wants to trade. We want that to just be available out of the box, right? And that's quite hard because it's a complex thing, options market making, and you need to be able to design it in a way that's still modular enough so that it can spin up new markets, new options to really fit user demand. One of the best things about DeFi is the markets can react to, the new thing and whatever the new demand is on a whim. So we need to be able to support that. The second thing is about really battening down LP risk and making sure that LP risks are mitigated so that they can stay in the game, they can earn the premiums for trading these options, and they can be, I guess, a source of uncorrelated yield over the long term that you can't really generate anywhere else on chain. Because options market making can be very profitable. It just requires the ability to manage these risks. So permissionless markets, uncorrelated returns for LPs, and finally is just making sure the protocol is maximally accessible to the universe of possible integrations, right? As I said at the start, composability is the best thing about options. The protocol itself needs to support this sort of composability, right? So you need to be able to turn up either as someone looking to offload risk or someone looking to generate yield and be able to access the protocol and the asset that you want. So that's what I think we still have to do.
The new source of yield got me really, really excited because with the coming of layer 2s, bridges also offer a very strong brand new source of yield, but that's just, in addition to and completely separate from options also providing another source of yield. I'll frequently make the joke in the crypto space, that's also not a joke, that the crypto space has produced 3 things that we know are product market fit. One is store of value money, Bitcoin, Ether. One is yield and DeFi. There's many, many ways to make yield. The third is content. But this one fits into the category of the second one where yield is just it's one of the main sources of just economic energy that we see throughout all of DeFi. And I haven't even considered options as being a long-term sustainable brand new source of yield. So that gets me really, really excited.
Exactly. I think DeFi needs to move off this kind of unsustainable model of yield farming and towards more sustainable approaches, as you mentioned, and options just present a way to do that. There are risks, obviously. You are selling volatility and you're selling future risk, but I think it's something that's sort of worthwhile if you know the risks and you're educated.
Yeah, and it's also a known science, right? It's not like we're inventing the wheel here. Like this is something that happens in TradFi all the time.
Exactly. Yeah, the options markets often dictate the real markets in traditional finance.
Right. Certainly. Yeah, we haven't really unlocked that too much in the world of crypto, at least not yet. I would imagine as the world of layer 2s comes online, the world of options also gets really, really unleashed. And so that is something very, very exciting to look forward to. Just a last bit of the conversation before we wrap this up, Mike, is the Optimism token has recently been announced, and Optimism's on-chain activity is hitting new records. And if I'm interpreting the airdrop and the commitment of the Optimism team is that every single app on Optimism will be getting a share of OP tokens to distribute to their users. So any details around that and any plans with the OP token out of Lyra?
Yeah, I think it's a really interesting model that they're pursuing. And Lyra we were the first Optimism native project. We qualified for one of the first airdrops, and we worked with our community over the last couple of weeks to put forward the first proposal to the OP token house as to how we would distribute these tokens. So we basically have an approach that is, centered around the 3 pillars we think of our digital community that we're trying to build on top of Optimism. And the first part of that is the builders, right? Without them, there's no stuff, there's no smart contracts, no public goods. We need to incentivize them to keep building a lasting foundation on Optimism on chain. The second is liquidity. Any DeFi protocol needs liquidity to function. It's kind of like electricity, and we need to be able to make that sustainable, generate this sort of yield that we're talking about. And then the third are the traders, right? And these are the actual users of Lyra that are really paying the tax that we all pay to Optimism. They're the ones generating the transaction fees, giving Optimism that revenue, which then gets funneled back into the projects. So we're looking forward to hopefully getting that proposal passed when the Optimism token gets released, and really starting to, test the boundaries of like how we can start to do new distribution methods in an L2 native way.
Amazing, Mike. Well, are there any other details that you want to talk about or we haven't touched on yet that you would like to share to the Bankless Nation?
Not really. I think follow us on Twitter, join the Discord, stay in touch. The Avalon release is coming out next week for the first group, and in the next couple of weeks after that for everyone else. So yeah, please join up.
Is there a date for this specific Avalon release?
Yeah, so we're looking at this 17th for the restricted testnet, and then the 30th of May for the public launch. Amazing.
Awesome, guys. Well, we'll put the links to Twitter and Discord in the show notes so all the listeners can go and find that there. Mike, thank you so much for joining me on this Alpha Leak edition of the Bankless podcast.
Thanks for having me.
Hey, we hope you enjoyed the video. If you did, head over to Bankless HQ right now to develop your crypto investing skills and learn how to free yourself from banks and gain your financial independence. We recommend joining our daily newsletter, podcast, and community as a Bankless Premium subscriber to get the most out of your Bankless experience. You'll get access to our market analysis, our alpha leaks, and exclusive content, and even the Bankless token for airdrops, raffles, and unlocks. If you're interested in crypto, the Bankless community is where you want to be. Click the link in the description to become a Bankless Premium subscriber today. Also, don't forget to subscribe to the channel for in-depth interviews with industry leaders, Ask Me Anythings, and weekly roll-ups where we summarize the week in crypto and other fantastic content. Thanks everyone for watching and being on the journey as we build out the Bankless Nation.